Good morning all, Quasidb morning bulletin for the 16th of the 6th. So we've got a FOMC hangover scenario today. Risk calculation is actually off quite a lot because there's 7.7 people attempting to buy dips versus the one person trying to sell. And now what's unusual about that is that the retail guys should be conditioned to be bearish. They need to be in a state of fear. They're being greedy. Okay, so because of that, we can see a red cell here and a positive number. A positive number tells us that they're net long, and if that number increases, then the bias is going to be stronger. One thing though was that the VIX is now below 30, so it got crushed. So maybe keep an eye on that. I think if we continue to crush on the VIX, it might override the retail sentiment because the VIX is a strong indicator. The US yields also softened a bit as well, so I'll show you that. Dollar CAD's buy. You can just look at your chart. You can just have a look there. UK 100's a sell. Oil was a sell. So yeah, not really that many dark colours today compared to yesterday. A lot of stops were taken out. So yeah, maybe look at dollar CAD. That's been green all week. So have a look at that. Get a small time frame for entry, and then know where your exit is, and then you should be okay. There, so it's a buy there. Aussie strengthened a lot overnight. Probably, maybe because of that, we got this. Possibly, the retail guys are heavily short, and they shorted over time. And because of that, the bubble increased, telling us that it's performing well, and that tells us it's performing well. So if you're wondering why Aussie performed well and we're supposed to be risk off, we just look at that, and that explains it completely. There are other fundamental factors involved, but if you're looking for a simple explanation, is that the retail guys shorted it, and so that's why we went up. Okay, so keep it simple. You can have a look at that. I guess you can just pause the screen, pause the video, but you can just look at reds and then look at greens, for example. So that's that. S&P has actually made a buy, but you can see how choppy it's been, and the arrow, what I'm saying there, the arrow is that we need to see a curvature of the 21 moving average, and the SSI line needs to come down, and the only way it's going to come down is that if they sell it. So these candles here are maybe inducing some bearish activity in order for them to flush them out. So we need to see a breach of these lows, but what's happening is that we're breaking lows all over the shop, but they're not actually exiting, they're going long. They're trying to buy the dip here, bought the dip, here, didn't quite there, but they did here. And so if they keep trying to buy the dip, they're going to get punished. So that's that. So there's not much to say. They're 68% long, so we should be coming down to get rid of that. However, over time, if they do sell it, we will come up. So it's a risky buy, basically. So just be very, very careful. Even though it's made a buy there, the circle, it's risky. I'll probably wait for like a technical indication where you've actually got at least a bullish candle before entry, and wait for like a daily pivot or something like that, and then wait for a candle above the pivot. If you wanted to buy, I definitely wouldn't buy now, just because of that. I would wait. Yeah, the curvature of the 21 moving average. See, we've come like this, and we're plateaued, and it looks like we're coming down. See that gradual decline, gradual incline, plateau, and then potentially a decline there. So if they do, then this will come up. So it's gold, there's the buy, there's a potential sell. All depends what happens with the cross. If we get a cross, it will move down or up. So that's that. We made like a channel there, so could be within that channel. We might find some support potentially. Now the US yields have come down they were quite a lot higher yesterday, and what we want to see, if we're bullish on risk, we want to see these bars track this trend line. So that can come down a bit, that could maybe stay a little bit, this can come up, that could come down. So ideally we just want it to just touch this line and not exceed it. And we've exceeded it here, so that's why that's got the arrow there. And so we might be bullish risk if they manage somehow, by some miracle, these dump. So it might be data related as well, and we have to keep an eye on that, like GDP and things. So yeah, obviously yesterday was a big mover because of Powell. That's that. So stat matrix, cross yen and US 500 correlation. Don't look for EJ or UJ for clues about US 500. Look at AJ, that will give you a better clue. Also CAD yen's quite weak as well. So if you want to know if US 500 is going to come up or down, you just pull up an AJ chart. For 89% probability, it will follow the US 500, or US 500 will follow AJ, vice versa. So that's the best correlation. Don't look for EJ or UJ. There's obviously a big battle going on for euro and the dollar. So the largest mover was dollar Swiss there, 8%. And you can see the targets and what we want are things to align, which I just put in the technical channel. Try not to maybe trade something that has like a disagreement. See, that you probably might not want to do Aussie USD because there's a red and green. You want red and red ideally, and the dynamic is probably stronger than the static. So if you get the two to agree, then that's good. And then all you need to do is get your technical analysis and then your risk management, and then you know where to target as well. Oh, and also there's the link for the SLC indicators as well. So you just click that, and that takes you to it automatically populates the promo code, which is pretty cool. So that's that. Signals, no signals today, which considering an enormous risk event was a great success because we would have been chewed up on those spikes. I don't know if you saw the Euro USD. We we had a lot of movement, and had we had a Euro USD signal, we would have been down and drawdown in a bit of profit, then we would have been a bit of drawdown and a bit of profit, and it would have just been pretty horrendous. So in a way, because we didn't get any signals today, I consider that a success because they're clever enough not to open trades during FOMC. So that's fine. Monday was amazing for us, and we're still up a lot because of Monday. So it looked like Monday wasn't very much payday. It was actually a destroyer of the retail guys. And on that note, we're at 51% failure rate. So I'd probably want that to get a bit higher personally in the Telegram. I can show you that actually. That's where I can show you, because this is linked into Telegram. We get notifications from this, and so ideally what we want, so it's got a bit higher now, so 69% is probably okay. Yeah, you might want to wait for a bit higher, maybe 80%, and you can enter. But knowing that you've got 80% confidence factor, 69% is okay, 80 is a lot better. And obviously never open a trade if we're below 50, because you might just go to a casino. This is a great tab, so do check this tab out, and what you want is cells to align. Okay, and we're seeing quite a lot of things that are aligning. Yeah, Kiwi's got a perfect score. Yeah, Kiwi is 6 out of 6. So yeah, they're getting destroyed on Kiwi. Anyway, so I'll just wrap up now, and have a good day, and I'll speak to you guys tomorrow for the bulletin, and then it's the weekend, so I'll speak to you soon.